Hello, everybody. It's Friday, and it's me, Buffy. I'm back with the second episode of the December Weekly Market Insight series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. All right, so let's just jump right into the world of news. Okay, so finally we wound up another busy week. Another busy and dramatic week, I must say. Expectations for where the Federal Reserve will need to take its benchmark rate in 2023 rose sharply, and Treasury yields surged after U.S. employment and wage gains exceeded forecasts in November. Let's see what else is under the surface. Growth at U.S. service providers unexpectedly accelerated in November as a measure of business activity jumped by most since March 2021, suggesting the largest part of the economy remains resilient. The Institute for Supply Management gauge of services rose to 56.5 last month from 54.4 in October, according to the latest data released Monday. Readings above 50 signals growth. Business activity rose from 55.7 to 64.7, the highest of the year, which hardly suggests that the economy is slowing as much as the Fed might like. Meanwhile, the euro area economy expanded by more than initially thought in the third quarter, though a recession triggered by the continent's energy crisis is likely to have begun. Gross domestic product rose by 0.3%. Oil advanced after China made further progress toward reopening, OPEC kept output steady, and sanctions of Russian crude kicked in. West Texas Intermediate futures rose toward $82 a barrel as China's key urban centers, including Shanghai, announced further easing of COVID restrictions over the weekend. Asian equities rose after Chinese authorities eased COVID testing requirements across major cities over the weekend and appeared to be engineering a gradual shift away from its strict COVID zero policy. Recurring applications for U.S. unemployment benefits rose to the highest since early February, suggesting that Americans who are losing their jobs are having more trouble finding a new one as the labor market shows tentative signs of cooling. Continuing claims climbed by 62,000 to 1.7 million in the week ending November 26. Initial unemployment claims increased by 4,000 to 230,000 in the week ending December 3rd. Although the gauge has been generally rising for the last 2 months, it's still near historic lows. U.S. employers added more jobs than forecast, and wages surged by the most in nearly a year, pointing to enduring inflation pressures that boost chances of higher interest rates from the Federal Reserve. Non-farm payrolls increased 263,000 in November after an upwardly revised 284,000 gain in October. The unemployment rate held at 3.7 as participation eased. The U.S. trade deficit widened for a second month in October as the value of imports increased and exports declined, which may weigh on economic growth in the fourth quarter. The trade gap in goods and services grew by $4 billion or 5.4% to $78.2 billion from a month earlier. Let me break down how the housing market is doing. MBA's mortgage purchase index fell 3%, the first drop in 5 weeks. On the other hand, refinancing activity rose 4.7% last week, but remains near the lowest level in 2 decades. The overall index was down 1.9%. The Federal Reserve rate decision and inflation data due next week loom as pressure points for a market governed by central banks. Evidently, the strength in U.S. jobs and services is putting pressure on Powell and his colleagues to keep up their aggressive campaign to cool inflation rather than pivot towards smallest interest rate hikes. That, in turn, is driving worry among investors that the Fed will over-tighten and tip the global economy into recession. So, will the Fed crash the U.S. into recession in 2023? What would be the conclusion of the rate hike decision? So many questions, right? But don't you worry, I'll let you know as soon as possible. So join me next week for more market updates, figures of various important economic data, updates on status and geopolitical nervousness, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have a great weekend, everybody. Buffy out.